The stock market is now moving into my forecast time window for a correction to begin, of approximately a 10% decline on the Dow, as illustrated by my trend forecast graph. Current price action as the Dow breaking to new all-time highs of above 34,548, running the short stops built up during the past couple of weeks, consolidation near the last highs. So, where the Dow is concerned right now, the start of the correction remains pending and imminent. However, the correction in tech stocks that we want to see correct has already begun, so it's possible we may see continuing divergence to some degree between the general stock market indices and the tech sector, such as the Nasdaq, with likely pseudo-analysts that populate the mainstream media will refer to it as sector rotation, when instead it is a case of many tech stocks such as Tesla being bid up to trade on ridiculous valuations, whilst the post-COVID Fed-induced economic boom is lifting the downtrodden stock sectors of 2020, hence the divergence. So let's see if the ongoing sell-off in tech stocks can result in buying opportunities in AI stocks. Firstly, what are buying levels? Well, buying levels are high probability technical levels that a stock could trade down to during a correction, i.e. an achievable technical chart level that could be used, for instance, to put in a buy limit order just above the buying level if one is eager to accumulate more stock in a particular company. As an example, last September the buying level for Google or Alphabet was $13.95, so a limit order at $13.95 or higher would be the objective, depending on how eager one is to gain exposure to Google. i.e., if I really wanted to buy more Google at that time, then the limit order would be over $1,400, as stocks tend to find support around round numbers. Whilst if I was less inclined to buy more Google stock, then the buying level would be at $13.95. Lower than that, and there is a decreasing probability that the buy level will be triggered. Stocks expensive or cheap indicator, EC indicator. This basically condenses down some 12 financial indicators I track for most stocks to determine if they are expensive or cheap, as stock prices are usually not a good indicator of value on their own. At its most basic, the higher the number, the more expensive a stock is, and conversely, the lower the number, the cheaper a stock is, where a reading of 20 to 60 tends to be the sweet spot for most AI stocks, as it implies earnings growth coupled with sustainable speculative interest, and thus results in good trending charts with support during corrections, where value tends to be fair so as to enable one to accumulate stock. Whilst readings above 60 increasingly indicate high levels of speculative interest in future earnings growth. However, this does not automatically mean that a stock trading over 60 should not be bought or sold. It just means that there is a lot of speculative interest in that stock, so expect greater price volatility as investors are more likely to react to news events. So I would still invest in stocks trading over 60 if they have a good reason to justify such speculative interest, i.e. such as AMD and Nvidia as being higher risk stocks, or Amazon of say 6 months ago that was set to greatly profit from COVID-19 lockdowns. Whilst a reading of over 100 is where stocks are becoming a bit too hot to handle, where holding, let alone buying, depends on understanding what's in the pipeline. What is it that's driving the stocks into the stratospheric valuations, such as AMD, first killing Intel and now giving Nvidia a good run for its money with its 6000 series GPUs? Whilst there will be some, such as Amazon, that I can't quite fathom the high valuations for, hence reduce my exposure to. Whilst readings under 20 suggest little speculative interest to drive stock prices significantly higher, so likely to expect trading ranges and thus tend to be sleeping giants in the AI megatrend. It also could be signaling problems with the stock, i.e. such as Intel losing the CPU war to AMD, which has made Intel a disliked stock to hold, whilst AMD has been heavily bid up into fever pitch, making it an expensive stock to buy most of the time. And the buy percentage rating. The buy percent indicator is how good a buy a stock is right now, right at the time of analysis, which is based on valuations, short-term stock trends. So 100% reading means a very good buy right now, whilst 0% means a bad buy with 50% neutral. Note this is in terms of buying and not selling. So understand 0% is not a sell rating. It just means that it's not a good time to buy a particular stock in terms of price trend and valuation right now at the time of analysis. And here's a quick review about my last update that incorporated the new short-term buy percentage indicator, how the buy percentage rating indicators are performed compared to what has subsequently transpired. Amazon had a buy rating of 100% at $3,092 and the current price is $3,312. AMD also had a 100% buy rating at $78, current price $78.8. Facebook had an 85% buy rating at $254 against the last price of $319.8, so a 26% increase. Google had a buy rating of 75% at $2,016, which is now up 19% at $23.98. Intel had a buy rating of 75% at $61, worth $57.5 today, so a drop of 5.5%. Nvidia had a buy rating of 75% at $548 against $592 today, so that's an 8% gain. IBM 70% at $119, current $145.5, up 22%. Microsoft at 65% was trading at $226 against $252.5 now, that's up 11.7%. So overall the buy percentage proved useful in identifying stocks that had a high probability for trending higher and thus to not risk waiting for lower prices before buying. And this video is an excerpt from my latest in-depth analysis that concludes in buying levels for AI tech stocks, buying levels and ratings, valuations and trend analysis into the market correction that was first made available to patrons who support my work. Extensive work including a look at Tesla, the Cathie Wood ARK Funds crash that I've been warning against investing in due to the high risk nature of a portfolio. And then there's a whole litany of stock analysis, individual stocks covered in my portfolio from Google at the top right down to Intel and number 12, with the buying levels for all of the stocks updated of where you can achieve discounts on the current price, probable discounts, or where stocks could trade down to during the correction, as well as updating on the current state of the GPU mining free money courtesy of the Ethereum mania. And quick look at Chia if you want to crypto mine on your hard drives. This is crypto mania is getting insane. Anyway, all of this was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. And my analysis of scheduled analysis includes more high risk tech stocks that should be coming in about a week's time. Basically condensing down roughly 300 stocks I've been looking at over the past couple of months into a dozen that I would personally invest in for the long run. and a Bitcoin trend forecast update, a look at UK house prices, and a piece that I've been working on for quite a while on how to get rich that is approximately 70% complete. Then further schedule is on the US dollar and British pound and gold and silver, which I've still to begin. So do consider becoming a patron by supporting my work for just $3 per month, and do remember to subscribe to this YouTube channel as we defend ourselves, protect ourselves from the rampant money printing inflation by the central banks. Insane money printing as though it's not going to feed through into wage and price inflation. Big inflation is coming, as I've been flagging for over 6 months, more like a year now. That's why I was saying last year, if you're thinking of buying big ticket items, do it now before the price hikes, which have transpired. You know, I bought a Corsair K7 for £340. Current price on Amazon is, was it $565, and similar for lots of other tech items I bought. For instance, the components in my PC that I ordered in January and got delivered in March was £3,100. Current price of the components is over £4,000. Crazy, the inflation is here, and it is accelerating regardless of what the indices say. So protect yourselves by investing in assets that are leveraged to inflation, and AI tech stocks are leveraged to inflation and are about to get discounted. So do subscribe to my YouTube channel for such analysis, and do consider becoming a patron. Cryptomania, forget Dogecoin. Today I'm going to be mining Budgie coin. What you need is a budgie. Just need one budgie to start crypto mining with Budgie coin. Ooh, that's an angry bird. Eh? You're angry today, Mr. Green. So this is how you mine Budgie coin. Get rich, get Dogecoin. Right, we need to grab that bougie. Yeah, it's a bougie coin, not Budgie coin. Bougie. Come here, bougie. I need you. Hey, what are you trying to bite me for? We need a bougie. Take my bougie coin. There you go. Got a couple of bougies. Which one's more profitable? Green bougie or the blue bougie? Not sure at the moment. I have to check the exchange rate. Definitely the green bougie is more noisy, more aggressive. It's more aggressive to mine with the green bougie. Okay, so let's start mining with the blue bougie, the bougie coin, the blue bougie coin. Once you get one bougie, the others will come.